Hey, welcome to Credit and Finance for Beginners. My name's Stuart, and in this video we're going to go over the differences between debit cards and credit cards, the pros and cons of each, and when you should use either of them. If you're new, this channel is dedicated to going over the fundamentals of credit and money in general. So if you're just looking for a quick thing or two, here's the table of contents for the video. And I've also broken up the timestamps along the progress bar at the bottom. So feel free to skip around, pause whenever you need to read something, but I hope you enjoy. So if you can't hang out for the whole video, the TLDR of this video is that debit cards are tied to a specific bank account. Money is withdrawn immediately as soon as you make a purchase. There's absolutely no fraud protection protecting you from anyone stealing your account information. And then you should use a debit card whenever you need to withdraw money from an ATM, or if you're afraid of racking up credit card debt. But hopefully after you've watched these videos, you can feel a little bit more comfortable around using a credit card and all of that. And then with credit cards, it's not tied to a specific account. Purchases are not withdrawn from your checking account whenever you make them, but they're added to your account balance. There's zero liability for any fraudulent activity on your card by law through the Fair Credit Billing Act. And it's very easy to go into credit card debt if you're not careful, but they're also very powerful tools if you can use them responsibly. All right, so for everyone else that can stick around for the whole video, let's go on to a quick overview of what debit cards are and then what credit cards are. A debit card is tied specifically to one checking account. You can also have a debit card for your savings account, which works the same way. If you swipe it, then money gets taken out of your bank account and gets transferred to whoever you're buying from. Or if you are withdrawing money, like from an ATM, then the money is immediately debited from your checking account or your savings account and put into your hand. So that's where a debit card comes from. Another thing with debit cards is that there's no interest rate because you're not actually charging anything on a line of credit. You're just pulling from the funds that you have. So if you make a purchase, you don't have to worry about paying it off later because you already did that because it was taken right from your account. And then typically, like I said, you only have one credit card, but you can have one for a savings account, or if you have multiple checking accounts, then you can have multiple debit cards, usually just one for each account that you have. And then with credit cards, they are not tied to a specific account or a specific bank account, because whenever you make a purchase with a credit card, the money's not withdrawn from account, but it's just added to your account balance. This account balance is an accumulating balance on purchases that you make during your statement. And then once that statement closes, which is usually like a month or 30 days, then you have to pay it off, usually 25 days after the account closes, and that's your payment date. Credit cards come with very high interest rates, usually between 18%, 30, 35, 36%. But on this channel, we're going to teach that your interest rate on your credit card is essentially zero, because you should not leave a balance on your account to carry over to the next statement, ever. You should always pay off your account in full every month on usually like 7 days before the payment date. And also with credit cards is you can have as many credit cards as you want because they're not tied to a specific account. You can just open as many as you want. It may take you a while to do that because they are not just going to give you a bunch of credit cards. But the world record for a number of credit cards open at a time is 1,497 credit cards with an available credit limit of $1.7 million. I don't recommend opening 1,500 accounts. You should be good with 3. You're really good with 1, but if you want to take it up a notch, you can have 3. So after the quick overview of credit cards and debit cards, let's look at how Americans are holding debit and credit cards. So in America, 214.8 million adults, or roughly 83% of Americans, have a debit card in 2020. And then with credit cards, only 187.3 Americans, or about 72.5%, have a credit card. So that's a big difference. That's almost 30 million Americans that have a debit card but don't actually have a credit card. So why is that? Well, there's a lot of myths surrounding credit cards. that I hear, like you should carry a balance or just pay off your credit card, but leave like a few bucks on there and then gain interest on it, so that way it looks like you're a good lender. That's not true. Another myth would be like it's impossible not to have interest on a credit card. That's not true. I've never paid a cent of interest on any of our credit cards because I pay them off every month. We're commonly taught that credit cards are scary and that we shouldn't have a credit card. Or if you do have a credit card, you should only use it in emergencies, which that one isn't as bad, using it only in emergencies. But I'm going to say that you should use a credit card for every single purchase that you make. And you'll find out why in a few minutes. So less credit cards, because credit card companies are predatory. Banks in general are predatory, but credit card companies especially. They rely on you not fully understanding the terms of your credit card, or like what dates mean, or just falling victim to the myths surrounding credit cards, because they make most of their money off of interest and fees that they charge their customers. And so in 2022, credit card companies as a whole made $105 billion on interest that they charge their customers, and $25 billion in fees, whether it be like over credit limit fees or late fees or stuff like that. So that's $130 billion that the credit card companies made because people didn't understand how to use a credit card, or they just used the credit card irresponsibly. Now, I've kind of been ragging on credit cards here, but let's go into some pros and cons of them. So the absolute biggest pro of a credit card is that they have fraud protection. So because of the Fair Credit Billing Act, you have zero liability by law to pay for any fraudulent activity that was done on your credit card until an investigation is completed and it's found out that you did in fact make this payment, or if it's found out that you didn't actually make this payment, then it's taken off of your account. But you are not legally allowed to be charged and pay for it until it's found out that you actually did it. And then another pro with credit cards is that it helps you build credit. And so we'll have another video going over specifics about building credit and like what your credit score is and why that's so important. But for now, just know that using a credit card helps you build credit. And there's also a little bit of a leeway window with credit cards. So if I make a purchase today, and then my account doesn't close, my statement doesn't close until 3 weeks from now, then I don't have to pay for that until 25 days-ish after that 3 weeks. So if you're tight on money at the end of the month because you haven't gotten paid yet, you can still make a purchase, a large purchase, and wait until you get paid and then pay off that balance with your paycheck. So there's a lot of flexibility with actually paying for things that you don't have with a debit card. And my favorite for credit cards is credit card rewards and benefits. So there's credit cards out there that are just packed with great rewards and benefits, whether that be cashback or miles. But a basic example is that there's a credit card called the Citi Double Cash. And so anytime you make a purchase, you get 1% back in cashback, and then when you pay it off, you get another 1% back in cashback. So you effectively get 2% back in cashback. So if I spent $100, they're going to give me $2 back in points that I can cash out for cashback straight to my bank account or a gift card. Or what you should do is you can transfer those to like hotels or airlines and use them to buy plane tickets or hotel nights and stuff like that. That's out of the scope of this video, but we're definitely going to have a lot of videos on maximizing credit cards and credit card rewards for travel and stuff. And then some cons of credit cards, and probably the biggest one is that it's very, 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 very easy to go into debt with a credit card. Like we said earlier, credit card companies made $105 billion off of credit card debt in 2022. That's how they make the majority of their money, is with credit card debt and people using them irresponsibly. Because you can spend money that you don't have. If I only have $1,000 in my checking account, but I have a $5,000 credit limit, then I can spend $5,000. I don't have $5,000, but I can spend it. And then next month, when it's time to make the payment, if I can't pay off that $5,000, then I'm going to get hit with the 35% interest rate that my credit card has. And then that compounds every month that you don't pay it off. you get charged more and more and more interest on that. And so because of that, credit cards require a lot of financial discipline. Just knowing that I can't buy this, even though I have the credit limit for it, I don't have the funds to cover that credit limit or that purchase to pay it off next month, so I can't buy it. And so it's very tempting to make that purchase because I can, I can do it. There's no like flag that's going to pop up and say don't do this, but I can't actually pay for it. And so that's how everyone gets in the cycle of credit card debt. It's because they buy things that they can't afford. And saying that goes for any credit in general, not just credit cards, but financing a house that you can't afford, financing a car that you can't afford. You look cool, but you're broke. So it's very, very easy to go into credit debt because of that. And the last con, kind of a con, but it can be like a little bit of a savior if you use it irresponsibly, is that you can only spend up to your credit limit. What that means is whenever you get a credit card is that the credit card company assigns a limit to how much you can spend on that credit card. Sometimes it's low, sometimes it's really, really high. But if I got a credit card, and usually for your first credit card, it's going to be very low. Like I apply for a credit card, it's my first one, and they give me a credit limit of $500. That's relatively low, speaking, for credit cards. But let's say I have $5,000 in the bank, I can still only spend $500 at a time with my credit card. So even though I have that $5,000 in the bank, I can't spend it on my credit card because my credit limit is only $500. Moving on to debit pros and cons. So one good thing about a debit card is that they're 99% of the time it's going to be free to get a debit card. Credit cards sometimes have annual fees. Your bank will just give you a debit card associated with your account. So you don't have to worry about paying to get your debit card. And there's also no spending limit. If you have the funds, then you can spend them. If you have $10,000 in your bank account and you want to go buy a hot tub or a car, then you can go and do that. You can spend all your money right there as long as you have it in your account. That leads into the next point, is that you cannot go into compounding debt with a debit card because you can only spend what you have. Like in our example with a credit card, if you only have $1,000 and you have a $5,000 limit, then you can spend $5,000 even though you don't have it. But with a debit card, if you only have $1,000, you can only spend $1,000. And lastly, there's no fee for withdrawing your money from an ATM, as long as that ATM is associated with your bank, or if your bank covers or waives ATM withdrawal fees, then you don't have to pay to get any money out. All right, and now moving on to the cons of the debit card. And so this is kind of like the opposite of a credit card, is that with fraud, if someone steals your debit card or just your card number because you made a purchase online and they took your card number, they can take absolutely everything out of your bank account. If you have $100,000 in your bank account, you're saving up for a house, and someone steals your debit card, it's gone. There's nothing you can do about it. The bank can't do anything about it. The police can't do anything about it. I mean, you can report them to the police and you can report them to your bank, but as far as getting that money back right away, that's impossible. They'd have to catch the guy. Hopefully he didn't spend it. You could sue him, but then, that's months, if not years, that you don't have your money that was stolen. And then, you ruined your life because you used your debit card. Using a debit card also doesn't help you build credit, and that's important if you want to buy a car or you want to buy a house, because likely you're not going to have 20 grand, or today you're not going to have 40 grand to buy a car, and you're definitely not going to have 400 grand to buy a house just sitting in your bank account. If you do, congrats, but then you're probably not going to be watching this video if you can do that. And another thing is that you can overdraft on your account if you're not careful. And so what that means is that if I only have $20 in my checking account and I try to make a $25 purchase, it's either going to get declined because I didn't have the funds to cover it, or it's going to go through and then the bank's going to charge me $40-$50 for not having any money. So you really have to be on top of everything if you use a debit card and are using it for day-to-day expenses. And then lastly, there's no rewards or benefits associated with the debit card unless you get a rewards debit card, but those are very rare. If you want to do that, then I would just recommend getting a credit card that has rewards and stuff associated with it. Okay, and so you might be asking, that was a lot of information, but when should I use, my debit card, or when should I use my credit card? And so here's the answer. You use your debit card when you need money from an ATM, and then you use a credit card for everything else. That's a little dramatic. That's what I do, and that's what a lot of people that use credit cards often do. But that may not be something that you're comfortable with at the moment. So let's move on to a more realistic example. You should use a debit card whenever you're withdrawing cash, like I just said, or you should use it whenever you're making a purchase through somewhere that you trust. Like if you're paying your water bill or rent or something like that, you shouldn't use it buying stuff off of Temu or Instagram, or I don't know if Twitter sells stuff, Facebook, because those probably they just paid for an ad spot. They're not reputable, and they could easily steal your money. You should use your debit card if you have a history of bad financial decisions when it comes to credit cards. So I'm going to preach a lot about how great credit cards are, how you should use them, and the benefits associated with them. But if you have a history of going into credit card debt, then maybe you should cut up all your credit cards and not use them until you're back on a financially responsible track. The rewards and the cash back and stuff like that aren't worth going into tens of thousands of dollars for credit card debt. And then when should you use your credit card? Use it for any online shopping, because in that example, like if someone steals your credit card number, then you are legally not liable to pay for it until the investigation is concluded. Really use your credit card for any purchase that you want. I don't use my debit card. Some people don't even carry their debit card on them, but I carry it just in case there's an emergency and I need to withdraw cash for some reason. I don't know of an example of when that would happen, but I like to just be prepared. But really a lot of people don't even carry the credit card or the debit cards on them. And then also you should use your credit card or get a credit card, really if you don't have one, if you're looking to build credit. And so that's important, like I said earlier, if you want to ever buy a house, or you want to buy a car, or you need a loan for something. The credit score is what they're going to look at to determine whether or not they're going to lend you anything, or if they are going to lend you something, it helps impact the interest rate that's going to be associated with that loan or that line of credit that you're given. All right, so to sum it up, the key differences between debit and credit cards are that debit cards will immediately withdraw money from your funds, whereas credit cards will add that purchase to an account balance that you have to pay off at a later date. With debit cards, there's absolutely no fraud protection protecting you from fraudulent purchases, and credit cards, you are legally not liable for any purchases that are made on your card that you didn't make. When should you use either of them? With a debit card, you should really only use it for withdrawing cash, or if you have a history of being irresponsible with credit cards or credit card debt, you should use a credit card for any purchase that you make online, especially if it's the first time making a purchase with a specific vendor that may not be 100% trusted, or and really any online purchase. And you should also use them if you're looking to build credit to take out a loan or to finance a car or a house or anything like that. All right, well, I hope this video was helpful to you. If you have any questions, feel free to leave a comment down below. If there's anything specific that you'd like to learn more about, please leave a comment down below, and I'll see you guys in the next video. Thanks.